Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is July 31st, 2015. It's the last day of the trading month, and it's been a pretty good month. I mean, I'm pleased with how the month has played itself out. It's had some ups and downs coming out of this. With a profit on the month, a solid profit. The market still, it's not giving you a lot of trading opportunities. I mean, here's the thing. I want to be able to put as much cash to work as possible, okay? However, there's this concept of risk that prohibits me from being able to put as much cash as I want at work. When the market's uncertain, when there's no like fertile ground for growth in the market, it's really difficult to want to go 100% long. I mean, I don't even use margin. Now, there's people out there that do use margin. They get like 100% long. I think it's absolutely bonkers. Absolutely bonkers. No way am I going to do that, okay? I trade with just the money that I have. I trade 10 positions, a max of 10 positions, and I put 10% of my capital on each position. I'm all in on a trade, or I go, one buy price, one exit price. I don't scale in, I don't scale out. But with this market, we're basically trading the same prices all year long. I mean, we've gone as low as 2040. I mean, basically over the last 5 months is probably the better way to put it. But going down to 2130, moving outside of that range at all, and it churns portfolios to pieces. It really does. So getting long with way too much capital is a bad idea in this market. So like right now, I'm 50% long. There's probably a good chance I'm going to be 40% long before the end of the day here. And I'll get to that a little bit more later here. But the long positions, you got to be nimble. You got to be flexible. And I've been preaching this all year. Patience is the absolute key in this market. Discipline, following your stop losses. Look, you have to be able to adjust to the changing market situations. For instance, last week, this week so far we've been going up. The week prior to last week, we were going straight up. The week prior to that, we're going straight down. You have to be flexible. If you're not flexible, you're going to get scorched in this market. Okay, you're just not going to make money in this market. It's impossible unless you're being flexible. If you temper your expectations, if you're going completely long, you're going to have a lot harder time to be flexible with the market. So you have to do more with less, and that's basically what I have done here in the Share Planner Splash. Let's go ahead and look at the S&P 500 up. A while there, I was harping on this on this head and shoulders pattern there. You got the left shoulder here, you got the head, and then you got the right shoulder. All right, and it triggered it. It sold off a little bit below it, and then it bounced back a couple weeks ago, sold off last week. But now what you got, and I didn't catch it right away because it's sort of very deceptive. But now instead of a head and shoulders, you got an inverse head and shoulders, which is really exciting because maybe this is going to be what takes us out of this range. If the pattern confirms, that will be a confirmation itself that we are breaking out to new all-time highs, and because the price levels are the same. So if we can confirm this inverse head and shoulders, and the inverse head and shoulders pattern that I'm looking at here, IHS pattern for short, you got a left shoulder right there. All right. Then you got the big dip. That's the head. All right. And then you got the right shoulder here. Okay. It's not confirmed yet. And today's action's not all that great either. We're basically trading between, break even right now. After having some decent gains on the day, the market's trying to give some of it back. But I'm not overly, the market's a little bit red today. It's not great price action, but in the overall theme of things, yeah, okay. Have a red day and an uptrend, that's pretty normal. I mean, even the one of the best short squeezes that we've seen of late, a couple of weeks ago, we had a down day there too. So as long as it doesn't get out of hand, I'm pretty cool with this market today. But the only thing that's really driving me nuts with this market, and probably driving me nuts isn't the right thing, but it's getting a little bit repetitive here. If you go back to August of last year, you could see where when we get to around like, it is a slight uptrending. Oh, don't mean to do that. It's slightly moving higher, but you could see, I mean, this little support line here, this rising support line, has been where all the reversals have occurred at. Every one of them. I mean, you go back to the one here in late August, you go back to the one here in December, you go back to the one here in May, and then again in June, and then again in July. And so we're at it again. I mean, it did not take long for us this week to get right back to the support level. And what do you see? You see a green candle. Now with the VIX, weakness is strength for the markets, and strength in the VIX is weakness for, and bouncing a little bit today. I'm not the only person that sees it. There's plenty of traders that notice this thing. This isn't like a Ryan Mallory kept secret here. This is out there for the world to know. I mean, I didn't discover this. I mean, everybody is following it. So eventually it's going to break. It has to break. I mean, that's just what markets do. Some people play support levels for them to hold. Some people play support levels for them to break. And the same thing with resistance levels. Some people play them to hold, and some people play. On the latter camp, I like to play support and resistance on breaks, not so much that they'll hold. So, I being long right now, obviously I want to see the support level break. It's not giving us that quite yet here. Maybe next week, maybe the end of today. I don't know. Today's probably becoming less of a likelihood of that happening, and not impossible, though. Next week's a much better possibility of that happening. But I mean, I have to be concerned about that. So I've got 5 positions in my portfolio right now. UPRO, this is the first one. I don't see a reason to get rid of this unless there's something that crazy happens to it before the end of the day here, but good upward of all the moving averages underneath, average underneath. That's something that I'm going to go ahead and hold. I want to see if we can get this thing, maybe this inverse head and shoulders pattern confirms and we can get it, beyond 74. Okay, if that happens, fantastic trade. Then I got QLD. I bought this one a couple of days ago. I bought it on 728. So far so good on this one too. I mean, I really like the Nasdaq. Let me pull up the Nasdaq here. Not the inverse head and shoulders that we have on the S&P, but I think it's a far better pattern, because what you have here, and this is what the S&P is really lacking right now, is a higher high. It does not have a higher high. But what you have off of the Nasdaq, that huge still, it took it below support levels, then it rallied like to new highs, high right there. And then it pulls back some, and you got the lower low, or I'm sorry, the higher low. So that's 2 big things right there. You have a higher high and a higher low. That instills a lot of confidence for me. And not only that, but the Nasdaq, it actually pulls back to a pretty good support level here. This area here, this is all support. Okay, it's a support range really. It's basically between like 5,100 and basically 5,000 and 5,100. So like a 100-point support range. It falls in there and it bounces off of it. Okay, so now we need to see, it needs to make another higher high foundation here now in place where, okay, after making that lower low, it made a higher high. And then instead of really adding to the confusion of these markets and making a lower low, it stopped about halfway down and formed a higher low. That's huge there, because now what you have is you have a trend line trying to be established here. Okay, but now the key is that we want to see this price action take it back to new highs, so that we can probably say, oh, look at that, we got a maybe like a channel of some kind that we can work with there, and that would be absolutely huge for the market going forward in determining some kind of a trend that has been completely lacking here in 2015. So let me look at the Russell here. Rut's been kind of bit in a rut. No, well, I guess pun was intended there. So, but in any case, though, it's got a downtrend still in place. That's why I haven't been trading as much of the small caps as lately. I mean, you look at my portfolio right now. I did get stopped out of Apple yesterday. That led me to jump into Netflix. Now I'm in Facebook, also still in Costco, trading some of the SBX Ultra. So I mean, it's right now. But if you look at the Russell, it is still have a downtrend. I mean, you know, if it wants to improve things, break this previous lower high. Does that? Okay, there's something to work with there, and it's not that far off. It's like less than 3% away. So for the Russell, that's not too much of a move that it has to make. Dow Jones, I typically don't follow, but I have been following a little bit more of late. This thing's been getting killed by everything. It's been getting hit today by Chevron, by Exxon. It's been getting hit by Apple. It's been getting hit by Microsoft. But I mean, a lot of the big price stocks, remember this index, a lot of the high price stocks have been taken down the Dow quite a bit. And I know there's another one that I'm just forgetting here that reported before Apple, and it just completely escapes me. But in any case, though, Dow is probably the most bearish of all the indices just because the earnings have not been going too well. This is only 30 stocks in the Dow, so it doesn't take for one stock to report bad earnings to affect this particular index. Now to the positions that I'm currently trading. Facebook got into this one, not at all thrilled with the price action in this one here. I've got my stop below this 20-day moving average. I think it'll hold. But I need to see something out of the close on this one, or I may go ahead and just cut my ties with it and see what happens over the weekend and see if it offers a better opportunity to get long on it again on Monday. But, I mean, you got the bull flag here, and it was acting like it was wanting to break out. All signs are pointing to that. The market was behaving, somewhat strong this morning. Facebook is a stock too that's been in a secular uptrend. I mean, the market's sideways. This thing's been going from 80 up to almost $100. So it was to see this, but like Apple, it looks like it's trying to, wallow in a little bit of its miseries post earnings here, because Apple, it's getting ready to test the 200-day moving average. That's going to be a key inflection point for not only the stock, but possibly the market too. If it breaks below it, that could cause some concerns for traders to want to get out of some other stuff as well. And Apple's, getting hit because of China. I mean, they got a huge, reliance on China manufacturing. They're going through a little bit of a slowdown there, and China a little bit of quite a dramatic one. And yeah, that's gonna hurt Apple. But with Facebook, I'd like to see this thing, bounce back up for us some today, if not be a casual before the end of the day where I go ahead and cut the position. Another stock, Costco, got into this one when it broke out here, but yeah, I'm up on the position, but it's just not doing much. Could be an opportunity to cut some exposure on it, up about 0.6% on the trade as a whole. Just really, it's a slow moving stock in general, but I was hoping we could get some more of this kind of continuation on the trend line. It's not really giving that to us, so this may be also another stock that I cut before the end of the day. And then you have Netflix doing really solid for us here, holding its gains on the day despite the market weakness. And one of the things that'll start moving is Bollinger Bands. I always choose the wrong indicator when I do this, but hold on a second here. There we go. You can see here, I mean, its stock's well contained inside the Bollinger Bands. There's no overextension here at all in play. I mean, when it has in the past, even still, it'll try to run some outside these Bollinger Bands. So it's really not overly relevant to this particular stock here. So the key here is to just hold this thing as long as it'll let us before, when it pulls back and takes out some kind of a price level or moving average that I'm not really comfortable with. So unfolding there, it's breaking out higher out of the bull flag. I'm happy with it. Then you have some of these commodities here with like USO, oil. Just look at this. I mean, we're back to where we're at the March lows here. I mean, this is getting pretty serious for these oil stocks. And then you got the likes of Chevron, That is not Chevron. There is Chevron down, 5%. Then you got ExxonMobil. It's down 4.3%. I mean, these are heavy moves. ExxonMobil is one of the biggest companies in the world, and it's taken a massive sell-off today. So, and yeah, I mean, these are earnings influenced moves and everything, but still, Exxon and Chevron take a hit, all the oil hit. That's going to drag the market. And now one setup I do like, ATVI. I've been watching this for a few weeks. No go at this point, but if we can get a move back above 26.13, that could be a good opportunity to get long on. HD is a move that it's trying to break out today with the market weakness. It's given back some of its gains as well. Microsoft, I do like this trade still. I thought about getting it into it yesterday, but opted for Netflix instead, and thankful for that. Got a somewhat of an inverse head and shoulders pattern there. And that thing can break out next week. But I say any move of the 8-ish would be a good idea. VIX causing some 4% level. So yeah, I'm probably going to be inclined before the end of the day to exposure and some stocks here, and possibly even in Facebook. So we'll see. Still some trading left to be done on the day, but that's going to do it for today. One more thing I want to go over is gold. You got gold sitting with a bear flag. I would not be trying to play this bounce here. That's a bear flag pattern. Probably got some more downside to it to go. And same with silver. It looked like it might be trying to bounce today, get back above that 20-day moving average, which has been stubborn as an ox so far, going back to June. Hit that 20-day moving average, retracted right away. I wouldn't be trying to play the silver bounce. You can do it. Today's Friday, so get through this last hour and a half of trading, survive it, enjoy the weekend, take your mind off of all market matter related things, and spend some time with family and get the rest that you probably well deserve need. That's going to do it for today. If you have any questions, please feel free to email me, ryan@sharepointer.com, or you can subscribe to the SharePointer Splash Zone by going to www.sharepointer.com/splash zone. And you become a member there. I'm in the chat room each and every day, sharing trade ideas, provide them via chat, text, and alert, as well as to anybody international. Yeah, you can learn, you can be educated, and trade with me each and every day. Y'all take care, and God bless.